welcome to the next round of DeFi Summer. I'm your host today, Ting from Cointelegraph China. I'm the chief editor for one of the biggest media for blockchain out there. And we have this roundtable. We're going to talk about DeFi and TradeFi conversions, and explosive growth is coming for 2021. And together with us at this table, we have investment director of Huobi Ventures, Unica Ing, and strategic growth of MakerDAO, Mariano, and David, who is the co-founder of Lithium Finance, and Kevin is the founder of NAOS Finance. Before we start the questions, why don't we have an introduction for our audience who is attending this roundtable right here, and introduce of who you are and your background in crypto and your project briefly, please. Mariano, go ahead.
Sure, thank you, Dean. Well, I'm Mariano. I'm working right now at Maker Growth core unit that is in charge of the growth of the Maker protocol. In the past, I've been working for Maker Foundation also, developing the Latin American markets. I was in charge of the whole implementation of DAI in Latin America. And here we are right now talking about DeFi and something very exciting that is real world assets, right?
Cool, welcome. Thanks for being here with us. Thanks. And David?
Sure. Thank you so much. David Lighten here, everybody. Really excited to be here with this great group of co-panelists. So I'm co-founder of Lithium Finance. We aim to be the world's first decentralized data oracle for private assets. We're focused on building infrastructure to bring real world assets on chain and to help DeFi go mainstream. Previously, I was and still am the founder of a cross-border payment startup built on the blockchain, which is how I got into the space.
Cool. Thanks for being here. Kevin, hi.
Yep, I'm the founder for NAOS. We've been around since mid last year, in the middle of the pandemic. So prior to NAOS, I was the founder of a fintech company in Southeast Asia. We see a lot of issue with traditional finance and fintech, and that's how we came about trying to find a solution here with DeFi. Before that, I was both entrepreneur and investor, so I spent time with Alibaba Group, the Walt Disney company, both on the strategic investment side, and also have done a few tech startups, exited between 2011 to 2014. So super excited to be here. I think DeFi is definitely one of the most exciting things I have done over the course of my career. So look forward to build partnerships and cooperation opportunity with all the panelists here.
Cool, thanks. Unica, hi. Is she still here with us? I think her connection is a bit on and off. I hope we still have her here for the introduction. Guess not. We'll have her to do the introduction a little bit later when she comes up again. Well, DeFi in 2020 actually started. And I think last year we've seen like 23-fold from under $700 million to a $15 billion growth. And 2021, it's even more of a major growth. And the total valuation that is locked peaked at 89 billion this year. And so in your opinion, what contributes to this growth of DeFi? Is it because there's so many more people from the traditional finance market is transiting into this space, or what is the reason here for this growth? And I guess, Kevin, if you don't mind, we'll start from you.
Yeah, sure. So I came from traditional finance, right? So the issue that we're seeing are predominantly, I'll say, microeconomics driven. So I think DeFi summer started in the middle of the pandemics, right? When equity market plummeted, when you see global interest rate basically at all-time low, right? So when you think about it, right, like retail investors are looking for ways to hedge, and they kind of found cryptocurrency as an alternative hedging strategy to gold or commodities, right? So, and interestingly, on the other hand, when you look at economically, businesses were struggling, right, because of the pandemics, and they needed cash flow loans or corporate loans more than ever, right? But on the flip side, you see banking or traditional institutions are becoming a little bit more conservative with their approvals, right? So this created a vicious cycle of, I would say, the widening credit gaps, right? The people who want to borrow money are able to get it, and the lenders are a little bit more, they're just holding back, right? So many of those businesses are now looking outside of their traditional financing options. I think that's sort of on the micro side of things, right? But if you think about it, we're seeing a very interesting market dynamic, right? Such that the liquidity from DeFi are coming into DeFi, right? And those liquidity may ultimately find its way back to CeFi to fund real world assets, right? So you see a dynamics where people are converting their cash to stablecoins so they can earn a higher yield on DeFi, but the demand will not come from DeFi. The demand will actually go back to CeFi. So I think that's going to be, I'll say, the growth factor for DeFi in the near future. So in this case, I think DeFi will become a very democratized conduit between cryptos and the real world, right? Where you see global lenders will have access to global assets and bypassing the existing banking system. So I think that's one of the trend that we're seeing. Happy to see what other guys are, other panelists are thinking from this view.
And I'm totally agree. And I think one of the biggest catalyzers on this is the institutions, right? As you perfectly sum it up. I think that institutions also cause some incentives on retail to start asking for credit, using the credit services on the DeFi world, which is 1,000 times easier than getting a credit on traditional finance. And I think that the mix of these two things, right, is one of the most important aspects of the growth of DeFi, right? Then I think that there are also some, let's say, different experiments also in DeFi that starts very small and suddenly they show up as being a very important building block, right? For example, right now we are seeing Aave go for institutions. Maker is building also institutional vaults, and there's this thing in which I think the whole ecosystem is growing in terms of previously you thought as crypto as something just for hackers, crypto punks, and that kind of things, right? But right now we are seeing this thing as getting more mature in the services and also in the use of the mechanics and of the products, right?
Yeah, and what was your opinion on the growth from 2021 to 2020 to 2021? I mean, what pushes this growth so tremendously?
Maybe I could give a shot at that. I mean, I want to piggyback on some things that Kevin said. I think it's really all about the bridge, right? And even if the big institutional positions in crypto don't touch DeFi specifically, we're looking at, at a very high level in the financial world at a time where, I was going to use the example of my friend was the first person to propose that Mass Mutual buy $100 million of Bitcoin, and they actually laughed him out of the room. And 6 months later did the trade. He was upset that, he didn't get his name in the paper. But I think, as as we get more mainstream institutional adoption, you know, that's kind of at the very big level, but down at the more entrepreneurial level where the innovators are, I mean, now everybody believes, right? Everybody says, wow, this is not going away. And so you get great entrepreneurs that are pushing the envelope and saying, hey, we want to do this in a new way. So, you know, I think it's just part of the ordinary kind of adoption cycle with any, you know, innovative sector. I think what remains to be seen is like, how mature is it going to get before it has to confront, you know, American style regulatory compliance, and how mainstream are these products gonna really be, right? So, and I can't predict the order of operations, but all signs point to more growth now based on how these big institutions are behaving. And I think it's cool to see that really empowers the entrepreneurs that are trying to build really innovative stuff. So it's great to see that synergies between the big institutions and the innovators.
Mm-hmm.
So yeah,
for you is more.
Yeah, I think to add to that, right? I mean, if you look at, you know, the TVL right now, right? Like more than 50% are still in the stable pools, right? Like, what does that tell us, right? That, at least in my opinion, that tells me that, you know, a lot of money are just being converted into cryptocurrencies, right? But they're not really, in real sense, do anything DeFi, right? They're not doing farming. They only see Y-earned or RV as a saving account, right? Better than what they will be getting from the banks, right? So are we, if you're just looking at the number, right? Sure, the TVL has grown tremendously over the past year or so, right? But are we really in the realm of DeFi when people are actually familiar with staking, farming, like multi-step sort of process? I don't think we're there yet, right? So, you know, I definitely see a lot of retail investors are, you know, from the DeFi space, and, you know, they just come into DeFi, right? But they stop at, you know, stablecoin farming, right? They're happy with the 5%, 6%. That's a lot better than what they would be getting at 0.1% at Bank of America or whatnot, right? But I think for them to take that extra step, that will require, you know, the industry to take another major step towards innovations and, you know, making things easier for everyone, right? For me, I think even when I try to do farming, right, sometimes I forget the steps, right? How do I get from this coin to this coin to that coin? All the LP token, now we're getting into like the 3-4 syllables, right? That's just ridiculous. So how do we get to the next stage? I think the solution is not about converting the existing 1% from holding stablecoin into DeFi, right? But how do we get the 99% into DeFi or cryptocurrency? Like, let's take baby steps, right? And I think the reason why we're all here is that we all agree that real world assets will be a good starting point, right? If they want to invest in stablecoins or just do farming, are they comfortable farming, you know, crypto native assets? Or if we give them the option to farm stablecoins that's backed by real world assets, would they be more comfortable with that, right? Because that's something they already know for, you know, their entire life, right? So I think this is a way for them to get comfortable with, you know, taking their first step into DeFi.
Cool. And I think Unica is here with us. Yeah. Can you hear us?
So, all right. Yeah, I'm back.
Cool. Yes, please go ahead and introduce yourself a bit, and then we're talking about what contributes to the DeFi growth from 2020 to 2021, and yeah, would like to hear your opinion on this as well.
Okay, sure. So this is Ying from Hobby Ventures, and yeah, it's very glad to hear with my two portfolios. Actually, yeah, we invest both in NAOS Finance and Lithium. So, I think there are several reasons to explain the DeFi booming, but I think the core power is from the interest rate gap between dollar assets and those crypto projects. So imagine people always pursuing higher yield, especially when they can mine through only stable coins. So it's kind of not yeah, it's kind of non-risk return for DeFi, for those DeFi miners. Imagine the so-called non-risk return on chain is as high as or even higher than equity investments. That's make people crazy. So I think that's why yeah, the TVL picked to 89 billion this year.
So it's a low risk investment with high returns, and that's why it's attracting a lot of people to get into this space, in your opinion.
Right.
Yeah, actually, for those institutional investors, it's not a non-risk or low risk return, because yeah, on-chain world it has system risks. Yeah, but for those retailers, I think almost all of those DeFi players didn't care about the system risk.
What role does DeFi play in the financial market, and where is it heading to? Specifically, I think this question, I'm curious towards Mariano, since you're based in Latin America, and we know the fiat currency there is, it's not performing well, and a lot of people are saying Bitcoin could be the currency to hedge against what's going on with the fiat world. So what is your opinion of DeFi?
What is happening in Latin America and with DeFi, it's something really interesting, because all those countries that has a history of inflation, right? Their citizens are really used to saving dollars, right? Those who can afford to save. And stable coins for them was something like very, very easy to understand, right? And to use. For example, I think that Pancake Swap from Binance Chain is really, really popular here in Latin America. For these reasons, right? I mean, there was a lot of people having stable coins already in their wallets. They already been using Uniswap. They've been already using MakerDAO, the day savings rate, and a lot of things, right? So what happens in Latin America is that there's a very high average knowledge on how to use these products, right? But the thing is, as also I think that Kevin said, the yield farming or the interest rates, right, only works when there's high demand for leverage, right? We are in a bull market, and everyone needs credit to make your bets. And that is where the yield comes from, the stable coins. But when you don't have that high demand for leverage, rates tend to get or arbitrated, right, or tend to like very low, and that is why I think that real world assets starting in Latin America could be like such a huge things to do, right? I mean, there's like a lot of opportunities to start, for example, getting into real estate in Latin America, because we are a region that is year over year developing a huge pace, and the returns that you could get from real world asset in this place of the world are much bigger than any other part, right? The thing is that, or at least it's the difficult what that we are seeing right now, is how the regulations can go hand in hand with the innovations, right? And I think this is like the most difficult part, because the way I see it is we have a technology that is borderless, that is open source, right? That is collaborative, and regulations do not tend to be like that. Regulations are just for one place, right? It's just for one jurisdiction, for one country. Maybe other countries are following what certain regulator says. But the thing is that for me, this to really work for the other 99%, as we were saying, I think that also regulators need to work together to see and to talk about it, because they say, okay, we are dealing with a borderless technology, right? How we can make like a borderless regulation too, right? And I think that is one of the biggest challenge that we have ahead. but I think that in the long term, we will have something like it's really good for the industry.
Mm-hmm. So you believe that DeFi will play a huge role in the region of Latin America?
Yes, a huge role. I mean, it's already playing right now that role. If you see all the different investments in exchanges in Latin America, they are booming right now.
Mm-hmm. And Kevin, what was it like in Southeast Asia?
I can only speak for part of it because I'm not from there, right? But I think the markets are very open, right? I mean, you're talking about a region that has basically leapfrog, bypassing a lot of existing technologies, right? Most of the country basically bypassing desktop and go directly to mobile, right? When you're talking about a region where the banking penetration is less than 30%, right? And the credit card penetration is less than 3%, people are not familiar with the concept of banking. Right, so it's easier to push a concept, hey, cryptocurrency, to them as a new financial instrument or a gateway, right? This is much easier than changing people's behavior by introducing new products to them, right? So I think the region has a tremendous opportunity for crypto, just because people never really knew financial system that the way we knew it from more of a developing country, right? So I'm super optimistic, right? And if you look at the region, right, Indonesia has a population close to 200 million, 300 million people, right? Vietnam, India, all those emerging markets where people are just dying for financial instruments or financial facilities, right? They're not getting that from banks. Where are they gonna get it? If it's gonna be through DeFi, so be it, right? So we see a lot of innovation coming out of Indonesia, Singapore, Philippines, in this matter, right? It's so much easier for the adoption, right? So I think the major challenge that we're seeing right now, in addition to those markets, right, is that we have to change people's behavior, right? We have to emulate the banking system that people are already familiar with, right? So if you're already familiar with going to the ATM and withdraw money, you're not going to like to have to go through DeFi, where you have to make a couple clicks and you have to deal with the gas fee, you have to deal with this, and you have to worry about security, all that stuff, right? We have to emulate. But if this is the first product that people get to know as their first financial ways of getting access to facilities, they will learn it, right? So I'm very optimistic about Southeast Asia.
Mm-hmm. And David, do you have some comments for what are the things with DeFi would need for mainstream adoption?
Yeah, absolutely. I mean, I agree with everything that's been said. I think I would make probably 2 points, and first start by saying that the arbitrage opportunity there is for the yield farming and so on is cool, but I think it sells short the potential of the space, right? I don't think people are really just stepping into DeFi and making it liquid just because there's a opportunity to earn an arbitrage versus like the traditional markets. I think there's an opportunity to earn arbitrage returns because there's so much innovation going on, and that's probably a reasonable way to look at it. But I think like generally for the seed is there, right? But for it to go mainstream, we now have to confront a lot of stuff. There's been some research done on, for example, like how many more people, just not to make a too vulgar a comparison, but how many people would start smoking pot if you made it fully legal, right? And I think that at this point, DeFi is still too much in the realm of kind of like the old Silk Road conceptions of Bitcoin to really attract the kind of people that we're going to hit the ball out of the park for. Right, because the people that are doing the staking, the yield farming now, these people are pretty sophisticated, and I don't think that's the spirit of like DeFi. I don't think that's really what DeFi is all about. I think DeFi is more about remediating serious issues with rents and aggressive fees and lack of transparency from the traditional financial system. I think in the sort of like economic history of this space, you have 2008-9, massive failure. You have companies like TransferWise and Robinhood that are saying, hey, it doesn't have to be that way. Let's do it ourselves. We can build something new. And DeFi is the next generation. It is just the final, it's the bleeding edge. So, I think that I really agree with what Kevin said, that we need to do some standard setting and we need to find a way to emulate traditional financial institutions in what we're offering. But the actual recipe, like what is going to go in the soup is hard because we don't want to become traditional financial institutions. We want to be able to offer products that can compete with what traditional financial institutions offer. But I guess that it's really the devil's in the details, because when you start getting into like how we get this to go mainstream with compliance and AML and KYC, I mean, I look back on the kind of bad experience that Facebook had, and of course Libra is not DeFi really, but when you insult regulators and lawmakers, you are making a mistake. And I don't think that, the space has to do that or be perceived that way. In fact, I'm witnessing Gary Gensler not really go after DeFi in a way that people said he might. And that's sort of encouraging. Maybe he has other priorities. But at the end of the day, it's really about finding a way to say, hey, we want to make this go mainstream. We have every intention to deal with the laws. But if the laws don't contemplate like a decentralized world, then the laws have to deal with us too. It's got to be a two-way street. So I think that's the next bridge to cross is, how do we create a world where FinCEN doesn't think that every unhosted wallet is being used for bad things? How do we create a world where companies like Chainalysis can like have much better monitoring than they already have, and how are we going to form partnerships with industry and government to do that? And I hope we can spend some more of the time today talking about this like crucial missing piece, because I think that's what's going to unlock the world of private assets for DeFi.
Interesting. I think I've heard a lot of people saying, yes, we need to have a regulations regulate this place, but I'm very happy to hear what you just said. You gotta do what you gotta do to make what we want to create, which is a different world that can compete with what's missing in the traditional finance. I'm very curious to hear what other panelists here could respond to David's opinion here. Unica, Kevin, Mariano.
Well, I think on-chain world is not an out loud place. So actually, we are actively embracing the regulations. From the government. And I think maybe one day people also need to do KYC through those on-chain wallets.
So you think we might have to do the same as before, KYC, ML? We've seen.
And I think from those on-chain addresses, it would be easier to track those cash flows through the address, actually.
Mm-hmm. Yeah, we've seen yesterday Binance actually had an announcement that they're going to make it more compliant with implementing taxation into their application for the users. I think you're saying DeFi will go through the same road as.
There's a challenge
there
because one thing is to, let's say, regulate the purchase and selling of Bitcoin. That is one thing, and that can totally follow the current rules of KYC and AML, right? But there's a total different game when it comes to DeFi, in which, for example, you have certain regulations of money transmitting, licensing, and different things in which you have a smart contract, right? For example, if you go to MakerDAO, the loan is given by a smart contract, right? If you go through Aave, the pool is a smart contract, right? Same for Compound or any other similar services. So regulation and regulators ask, okay, who is giving you the money? Okay, it's a smart contract that is giving me the money. How can the regulators know about a smart contracts, right? And this is, I think, the most difficult part right now, that regulators are scratching their head, because they say, okay, I need to understand what a smart contract is, because this smart contract is kind of creating money, right? So that is a very challenging thing for DeFi to tackle. And this is why I think that regulators need to work together, because this is a borderless technology. At the end of the day, open source knowledge and open source code wins, you know? So I think that they need to be really careful on the things that they are going to regulate.
Yeah, I mean, I couldn't agree more, right?
I think it's good.
Yeah, like we have been working with the Maker team for the last few months, right? And I think the major challenge is about setting the right legal structure that combine both in DeFi and CeFi, right? So for a player like NAOS, I think the main challenge is that, you know, we cannot just be the rebel in DeFi and just say, hey, let's go revolutionize everything, right? Because our one foot is still in traditional finance, right? When we were doing the legal structure setups, right, one of the questions that's being frequently asked was, who's the ultimate shareholder, right? Who's the ultimate beneficiary, right? I think that's a question that we cannot answer, right? In a DAO structure, like what Mariano said, they're just not there, right? So how do we educate the lawmakers or regulatory bodies or whatnot? I think we have a long road to go, right? But I'm taking the comfort that we're not, you know, the five of us sitting here are not the only one making the push, right? I think everyone in this space is making that push. So yeah, hopefully, you know, we have more partners on board to help push on that front.
Well, Unica, earlier you mentioned that here you have a couple of projects that you Huobi Ventures have invested. So what, in your opinion, you know, what are the most critical winning formula for a DeFi project to shine and gain a market share?
Well, I think the most important thing is to meet some unmet needs on the market. Like, when I talked to Kevin about NAOS Finance, I think it's very important to meet the gap between dollar assets and I mean the cash and the money end to the assets ends in Southeast Asia. So that's why we invest in NAOS Finance. It's not only we want to explore the opportunity to combine CeFi with DeFi. It's also because we think those interest rate gap need to be handled by some new technologies. So that's I think the core power is to fill the unmet needs. It's not only because we use blockchain or we build a market on the on-chain world.
And what about what the infrastructure that is desperately needed for the DeFi ecosystem right now? Well, I guess this question can be addressed to the other panelists here, David, Kevin, and Mariano. I mean, Unica has just mentioned why they're investing in NAOS Finance, but in terms of other infrastructure in the DeFi space, what is desperately needed at the moment? Please go ahead.
I would like to invite Mariano to take the lead, right? Because I think Maker has created the most important infrastructure for the entire ecosystem, right? So with the inflation to die, with the whole system, right? So I think he's probably the best person to address that. David and I we can add to it from our perspectives. Mariano?
Okay.
Yeah, the thing is that, at least in my eyes, what we are seeing right now, let's take, for example, MakerDAO as some form of public good, right? That it has transparency, the mechanics very well defined. And what is needed right now is these satellite projects that may use all this infrastructure to start providing what people needs and want, and also what industry wants, right? For example, I mean, you can use all the MakerDAO system to start providing small loans to a certain part of the users, right? Then you can have real world assets and start defining or start getting into a vertical that you maybe know very well, and you know what the products are needed, and then probably real estate, then trade finance. There's like a lot of things that you can break down out of that concept, right? And I think that we need that because in each of those verticals, you have to comply with very specific laws and regulations, right? It's not the same for trade finance that for real estate, right? And for real estate in each region of the world, right? In each country. So what I'm starting to see is that it is needed more projects, for example, like NAO or Lithium, that start to develop their expertise on that matter, right? Also leveraging all other things such as, well, MakerDAO, Compound, Aave, and these things that I tend to think that they could be some form of, let's say, public good of DeFi or something like that.
Okay, thanks, Mariano. David, do you want to go first? Because
I'd love to. I mean, I think I agree with everything Mariano said. I mean, basically, it's very clear that, you know, traditional financial services don't deliver kind of the goods in every case, right? I mean, that's been well discussed. But I think that, you know, once you make that determination, it's not totally crystal clear what infrastructure is needed to bring DeFi to the next level, right? And so I think the Lithium perspective is that, you know, there's the whole universe of assets that trade every day, right? And there's a certain level of transparency in the public markets, right? And we've been talking about the interplay between rules and regs and commercial stuff all day. But, you know, if you're going to invest in a public company's stock, you get all sorts of really juicy disclosure and financials and wonderful stuff that's required by the law and for that company to maintain a good reputation, right? And I guess that the spirit of the stuff is to protect investors, so that you have to be accredited or you need to be a sophisticated purchaser to put money into private businesses or other private assets. But I think the reality is that the private world is big, and there doesn't exist like a piece of market infrastructure to give people like proper kind of symmetric information about what private assets are worth. And so as the world changes and we rely less on kind of these centralized like financial institutions or other guarantors of our information to hold on to data, we don't want the banks holding all of our data. There's an opportunity to create new interesting infrastructures to promote the trading of private assets on chain. So Lithium's kind of vision for the world is to have a decentralized oracle that can offer pricing information about basically anything, so that if you go into the market and you want to trade synthetics and they've been floating for like a long time and you're concerned about what the right price to pay is for synthetic SpaceX or synthetic anything, you shouldn't have to fly blind on that. You should be able to have some data on what the thing is worth, the same way that you would do it if you were buying something on eBay or whatever, right? I mean, we're trying obviously to bring a certain level of sophistication to this process and methodology. But I think the core point is that as the world changes and we're relying less on centralized third parties to be the brokers of data, we need to re-architect how we transmit data. And so Chainlink has done some fabulous things for the world of public market data. I mean, it's extremely impressive, and they're ubiquitous. But there's this just enormous untapped opportunity in the world of private assets. And, you know, I have only learned this recently, but the private asset market is bigger. So we're pretty excited to see what happens in the future here as private assets get more liquid and the world gets more transparent.
Mm-hmm. So in your opinion about the data oracles is the centralized solution is not transparent enough. That's why we need a blockchain solution for the data oracles.
Well, that's exactly right. I mean, look, every day that goes by, you hear about people's data getting hacked. You know, I get letters from my insurance company all the time about my data leaking. This is ridiculous, right? This isn't serious. So when you're talking about other commercial data, like, I mean, we should be able to have it all. It should be secure and it should be transparent. What we have today is insecure and opaque. So like, there's nowhere to go but up.
Mm-hmm. Cool. Thanks, Kevin.
Yeah, so the way NAOS is structured is that we're basically emulating the banking process in the real world, right? So if we rewind 20 years and we ask Jeff Bezos, like, what is the winning formula for Amazon? I don't think he will be able to give you an answer, right? But now we have the benefit of hindsight, right? So if we were to look at e-commerce companies and look at how the industry started getting dominance over the last decades, right? I think the same infrastructure concept applies, right? So you have online payments, escort services, logistics networks, cross-border solutions, social medias, everything propels the growth of e-commerce, right? But I think the most important or the game changer really comes down to the fact that the e-commerce really replicates the entire offline shopping experiences, right? You don't have to go to a store anymore. Like, you can see the pictures, potentially even 3Ds. You have all the descriptions, right? You have one-click payment options, right? You can get the stuff. If you don't like it, refund it within 7 days, right? It emulates the entire process, right? It gives you more convenience than inconvenience. So I think for DeFi, the type of infrastructure that's required will be the ones that can allow users to start using DeFi the same way that they're using traditional finance, right? So that means no more 400% collateralization ratio for a loan taking out, right? There has to be a multiple globally accepted and trusted currencies, USDT, USDT, DC, DAI, and what have you, right? You have to have a secure asset storage options, right? So everything that allows people to be comfortable with DeFi, right? So how do we boil down to like specific infrastructure, right? So Oracle is definitely one thing, right? Stable coins, potentially custodianships, right? Investment options, right? How do you do portfolio management? Data, what have you, right? So pretty much everything that you see on a day-to-day basis when you do traditional banking, right? So I think that would be the key for the infrastructure.
Mm-hmm. We are running out of time. I think 1 hour is already up. So I have my last question for all of you. Since the market has been going up a little bit right now, we've seen today Bitcoin has hit 40K. Right now it's at around 39. Seems like the market has gone back a little bit, and we know the crypto market has been very volatile. And are we, in your opinion, are we heading to a bearish market, or is the bull run still continuous? If so, if we're heading to the bearish market, what does it mean to your business, and how do you, change your strategy around this this market? And Unica, would you like to take the last question first?
Wow, it's a hard question, right? Yeah, investors yeah, always make mistake in predicting the market, I think. Yeah, actually, um, yeah, a lot of individual investors will yeah, will tell me well, the Bitcoin will hit 100K at the end of this year, or they are waiting for for the bottom to buy some Bitcoin or something like that. So yeah, and actually I'm not good at predict the market, and I think the one thing the market investor structure is different from the last round. So I think even if there is bear market, I think the period will be shorter than before. So because the American investors is leading the market now, so maybe will be like the equity market in United States instead
I see.
of the yeah, the 4-year period before.
Mm-hmm. So you're
Well,
quite optimistic. You're quite optimistic because the structure of who are in the space is different from before. So that's good to know. It's good to know.
well,
Thanks.
Yeah, for me, price may go up.
actually, it's always. I'm sorry. Yeah, I think it will be always right answer to yeah, to long Bitcoin, I think.
Mm-hmm. Fantastic.
I was going to say that for me, price may go up, may go down, but what I'm seeing that we are in a total bull market of developers and teams building products. And for me, that is the important thing. I mean, it's outstanding the amounts of developers that every day are getting into Ethereum or other blockchains and start getting into more and more how to develop mechanics, game theory, products. It's, for me, it's amazing, and I think that is the important metric to follow.
Mm-hmm. So it doesn't matter where the market is going, just focusing on building and making it happen.
Yeah,
Good.
gray matter,
Mm-hmm.
it's entering the market every day.
Cool. Thanks. And Kevin?
I love it how Mariano just now answered the question. Hey, love it. I completely agree, right? So every day should be bull market for developers, and that should be the spirit for DeFi. And I think I don't want to speak for David, but since that we're both in real world assets, right? I think there shouldn't be a difference between bull and bear market for us. When you look at, like, at least for NAOS, right? NAOS was founded during the pandemics, right? And we're aiming to solve the problem that was amplified during the economic downturn, right? So when company needing the capital the most, I think that's where real world asset has opportunity to shine, right? So, other than the token price, I don't think the bear market will have much of an impact on the business or the operations. If anything, there's a borrowing demand, like what Mariano was saying about leverage, right? So there's a borrowing demand in the bull market, but in a bear market, sure, from the operational side, from the real world asset side, there's a greater demand, right? So I think the question really boils down to how we can do a proper risk analysis in a bear market to continue the growth trajectory for real world assets beyond chain. So that's going to be one of the things that we have to tackle in the near future.
Cool. Thanks. And David, I'd like to hear your final comment on this.
Sure. I mean, I guess I was not at the ETH conference myself, but I heard from a number of people, like, there's no way this is a bear market with how many like genius developers are just jumping in head first to the space. It just doesn't make sense. So I agree with that characterization. I mean, I think it's nice to have a bull market, but you know, like Kevin said, it may not really matter, because what we're seeing is that the innovation is not stopping. Like, I don't think how much liquidity there is in Bitcoin really is that significant for like how much entrepreneurs are going to innovate in the space. So I'm quite optimistic about the impact on, you know, financial services, which is like what we're really talking about today. I think that we're very early in the curve for financial services, and you know, I think as it goes more mainstream, and you know, the average person off the street that's not like staying up till 5 a.m. yield farming wants to come in and use products, gets more mature and more aware, we're only going to see growth. And that, you know, whatever the cycles in the price of Bitcoin are, it's kind of it's exogenous. So yeah, I'm also very optimistic. Absolutely.
Fantastic. Thank you so much for a wonderful discussion. I mean, we had debates on whether regulation should regulate DeFi or not, to looking at the space, saying, you know, it doesn't matter if it's bearish market or bullish market, the show must go on, and everybody should be focused on developing and contributing for the long term. And as Unica says, you know, don't predict the market and just go with long for Bitcoin, and that's always going to be the right answer for everything that you're trying to, you know, predict, whether it's people within this crypto market or people who are trying, the 99% who's trying to get into crypto or DeFi. Just I like the answer, like long Bitcoin is always the answer. So very excited to see what's going to happen in the DeFi space, and thank you guys so much for joining this panel and also working so hard to make things happen, and looking forward to another great discussion with all of you. And for our audience, if you have any questions for our panelists, we're on Twitter and you can follow us and send us messages, and I'm sure Kevin, Unica, and Mariana and David will get back to you directly. And have a great one. Thank you so much.